Hello traders, you're welcome to this video. This particular video, we're going to be discussing the break and retest strategy. Break and retest strategy. Okay, so basically we are going to be learning how to spot key levels in the market, how to identify when a breakout is real, and how to profit from the retest with precision entries. Okay, now first of all, you might want to learn how to spot key levels because without knowing key levels, the break and retest strategy ain't gonna work for you. Okay, so you have to learn how to spot key levels first of all. Now, the key levels we're talking about are support and resistance levels. Now, let's just start. The resistance level is a point where we have a rejection to the downward side, multiple rejections. Now we can see there was one rejection here, second rejection here, third rejection. This forms a resistance. Now a support is where we have multiple rejections to the upward side, right? Now we can see that, let us look for a quick one. Now we can see that there is a support level here. There was multiple rejections, one here, another here, another here, another here. So when you have multiple rejections to the upside, that forms a support, okay? Now, key levels in the market, as I already mentioned, there are areas where the price has historically reacted. Okay, so because once you have identified a support or a resistance, we know that is like an indication of a historical price movement. Okay, but that level is still going to hold in the future. Like we can see that even if we have drawn this support after this point, because we only have like three rejections. Okay, later on, that support level still held. There was still rejections happening around that level. Here again, the rejection happened. So, although it is historical price movements that we use to determine these levels, even in the future, these levels still hold. You can see that going forward, you can see price was still rejected around that level. As for the resistance, you can see price kept on being rejected. So, they are valid, irrespective of the fact that historical price movement is what determined them. Okay, now another key level, another key point to note is that trend lines are also very useful, right? Trend lines indicate dynamic support and resistance levels. Now we can see that this was a support, although it was diagonal support, a dynamic support. So as price was climbing up, it was getting rejected, right? So trend lines, you might want to draw diagonal lines that connect at least two or more highs or lows, right? Now, trend lines represent dynamic support and resistance, and they can show you the current market trend, while the support and the horizontal support and resistance levels are mostly historical prices that are used to determine them, and although they are relevant in the future, trend lines are mostly relevant for current market price movement. Because if you just draw a trend line in a historical price, that trend line might not be useful for you in the future anymore, because price might not really get to the trend line anymore. Like imagine you had drawn a trend line here, and then later on in the future you can see that that trend line might not be useful for you anymore. So trend lines are mostly used for current price movement. So as the prices of the asset is progressing, you might want to draw trend lines, as they are going to be helpful, right? You can see, draw a trend line using the current price movement. So now this trend line is a dynamic resistance. If price gets to the trend line, it could possibly get rejected. Okay. Now, another key point to note is that psychological levels also play a good role. For example, round numbers like 1.2, 1.3, etc. That's for the prices. They often act as key levels since traders psychologically react to these levels. Now, that's the reason why they are called psychological levels. Okay, those round numbers, traders usually react to those levels. Okay, so markets tend to slow down or reverse around those points. You might also want to have that in mind. Now, how do you identify a real breakout? Many times the price might break a key level but quickly reverse. So, to spot a real breakout, First of all, in order to spot a key breakout, you might want to look for a strong momentum, okay? A strong momentum. On a breakout, the volume should increase. So with a high volume, you're going to see a strong momentum. For example, this was a breakout from a support, right? So the breakout from a support, and we can see how the breakout candle was strong. The sell candle was quite strong, okay? Now, if the price breaks a level but the volume is low, if you can see a weak momentum, then it could be a false breakout, okay? So you might want to look for um you can see this was another breakout, though this was from dynamic support, but you can see that right after the breakout, just see how this candle was long. This was showing a strong sell, okay? So showing a strong sell momentum. All right, this is another example. You can see right after the breakout, you can see that the candle was long. So usually after breakouts, the volume is usually high. You're going to have a long or at least a strong candle. If it is a bullish breakout, a strong bullish candle. If it's a bearish breakout, a strong bearish candle. We can see there was a breakout from this dynamic resistance, and you can see what happened here, a strong bullish candle. Now, secondly, you might want to wait for the candle to close. Don't just jump into a trade as soon as price breaks a level, okay? It is good that you wait for the candle to close above in an upward breakout, for example, like this, or below in a downward breakout, okay? Like this example now, you might want to wait for price to close, downward breakout. This adds confirmation that the breakout is genuine, okay? Now, after a breakout, the market often pulls back to retest the broken level. Now, if it was a support that was broken, most of the times that support will now turn to a resistance, and price might retest that resistance. Now, a successful retest adds more reliability to the breakout. Okay. Now, once you've identified the real breakout and a retest, let us just look for a good example. Okay. Sometimes the retest might not always happen. Yeah, the retest might not get to the point of the breakout. For example, we can see that after this breakout happened, there was a breakout here. Now, this retracement did not get even close to where the breakout happened. Now, this was another breakout. The retracement got a little bit close, but not exactly to where the breakout happened. So sometimes the retracement might not get to exactly the point of breakout, but there are situations where a breakout, after a breakout, the retest gets to the point of breakout. The retest gets to the point of breakout. Now let us look for a good example. Let us just see if we can find a good example of such. Okay, now we can see that this was a bullish move and there was a breakout here. There was a breakout. We can even see some bearish, this is a bearish candlestick forming. Yeah, after the breakout happened, it was as if there was a struggle between the bulls and the bears. But then we can see bearish candlestick patterns. So sometimes, even if you don't see a very long candle, sometimes you might see bearish candlestick patterns to just add to the confirmation. Okay, so when you see bearish candlestick patterns, you can also ride the breakout. Now we can see that right after the breakout, there was a retest. You can see that this candle came very close to where the breakout happened. So this is a situation whereby we have a retest right after the breakout. Right after the breakout, we had a retest because the market often revisits, but sometimes it might not get very close. Now, when you see confirmation candles such as this, like bearish candle, because this is a bearish breakout, right? So it was a bullish breakout, we'll be looking for bullish candlestick patterns. So when you see bearish candlestick patterns in a bearish breakout or bullish candlestick pattern in a bullish breakout, then that can be like your signal to enter the trade if you want to ride the breakout, okay? And then you can set your stop loss just above the retest level, right? Like after this breakout happened and it retested here, you can set your stop loss just right above the retest or right above the point of breakout. okay? And then for your take profit level, you can decide to just use the nearest support level for your take profit in a sell, or the nearest resistance level for your take profit in a buy. And you can also use other indicators for additional confirmation. You can use moving averages, you can use stochastics or RSI or any other indicator of your choice for extra confirmation. Now, that is basically how the breakout and retest strategy works. Once a breakout happens, the market tends to reverse to retest that point of breakout. So when that retest successfully happens, that becomes your entry signal. So after the retest happens in a bearish breakout, then you want to look for any bearish candlestick patterns, and then you enter. This was a bearish candlestick pattern right after the breakout happened. That was like a valid confirmation that the breakout was going to be real and not false. And then after that, we had a retest. And then right after the retest, we can enter a sell and set stop loss right above the breakout point. And the take profit can be at the near support level. Now the reverse for a buy, for a bullish, if it's for a bearish, I mean, if it was a bearish trend and then you have a bullish breakout, then you can just look for if it was a bearish trend and you had a bullish breakout, then just look for the nearest support level. Yeah, the nearest support level for your stop loss and the nearest resistance for your take profit. It's just the reverse. Okay, so basically that is how this strategy works. I hope you found this video insightful. Kindly like and subscribe for more. Cheers and happy trading.